Hi, my name is Judy and welcome to this video where I describe the strategy for POGO. Now, the POGO strategy is you're essentially trading the 4-hour on the 30-minute chart. And the reason for that is you get in with nice price action, good price action on the 30-minute in order to maximize your reward to risk. The only indicators that you're going to need for this strategy are the exponential moving averages, the 20 and the 50, both on the 4-hour and on the 30-minute. But it's the EA that worries about the 30-minute, not you. All you need to worry about, or to pay attention to, I should rather say, is the EMAs on the 4-hour. So here I've got the pound Swiss chart. And what I'm going to give an example of a very recent lovely run on pound Swiss. Now, when you're going long, you will obviously need the 20 to be above the 50 EMA. When you're going short, conversely, you'll need the 20 EMA to be below the 50. Now, what you need are 2 cycles, a minimum of 2 cycles on the 4-hour. So that's higher highs and higher lows. So here you've got 1 cycle and 2 cycle. Started on the 11th of January, and you've got 1 cycle with a higher low, and then you've got a higher high and another higher low. Then you've got this pin bar here. If you can see it beyond where I've put the line, you see. Well, actually, it's an indecision bar, but not quite a pin bar, but on this bar, you'll see it retraced to the 20 EMA at the end of the 2nd cycle. Now that's an important point here. So you've got 2 cycles, as you see here, and then it retraces and interacts with the 20 EMA. At that point, when I see this happening, this is the time now that I will place POGO onto my chart. Now, in order to do that, I need to place it on the chart that I want to take the trade. So I want to take the trade on the 30-minute. So I'll go to the 30-minute chart, and you will see that this is the same lines that we had indicating the cycles on the 4-hour. But you'll see that here is where I am would have loaded the POGO EA. But the 20 is below the 50, therefore it's not going to take. The trade will only take when the 20 is above the 50, the same as is on the 4-hour. So the 4-hour and the 30-minute EMAs need to be in the same order for it to go long or short. So the POGO EA will do nothing. I've got it loaded on the 4-hour at this point in time. But because the 20 is below the 50, the EA will not do anything. It will just sit there, constantly checking what price action is doing. And you will see that price rose, so it continued to rise, and allowing the 20 to go above the 50 EMA. But only when the 20 goes above the 50 EMA and price comes back to interact, like it did here, with the 20 EMA, will POGO allow a trade to be taken. At this point here, we identified the trade set up here on the 4-hour. We loaded POGO onto the 30-minute chart. Remember, the EA has to be on the chart you want to take the trade on. We have the setup here on the 4-hour. Now we're waiting for the setup to be correct on the 30-minute for us to trade the 30-minute. So POGO was loaded here at what time was this? This was 19th of January, 8 a.m. But the trade setup was only 21st of January at 10 o'clock at night. So we kept POGO on for all this time waiting for the right setup. Price EMAs crossed in the right direction. In congruency with the 4-hour, price retraced and interacted with the 20 EMA, and bang, the POGO will have taken the trade. And as you can see here, there would be it would be a nice reward to risk. So the trade would have taken in around here. There'll always be a little bit of slippage, always. You'll even notice that with your manual trading. So you would have got in around here. And the strategy is a 30 pip stop loss. So it would have been about thereabouts. And it take the ideal way to trade this is to take two trades. One at 1-to-1, so it would have got actually it would have got here on the next bar, it would have got 1-to-1. That trade would have closed. You'd have banked that one trade. If you'd have traded at 1%, you'd have banked the 1%. The stop loss would then come here, and you would have no risk on the table. You'll be at break even, and then it runs to 60. The next trade is 2-to-1. You can set it to 3-to-1. You can set it to whatever you like, but that will be covered in the next video. So here, you would have got a 2-to-1 trade. So in all, you'd have had a 3-to-1 reward to risk on this trade here. Having just put the EA on the chart, on the 30-minute chart, at this point in time, when you recognize the setup for a long. Now, if we go back to an earlier time on this, I've got another setup here. We go back to an earlier time here on the 4 hour. Let's have a look at it on the 4 hour. We go just back a little bit here. You go back to the 28th of December, you will see that there was another 2 cycles, but the EMAs were not in order like they were on the previous example I showed you. But that doesn't matter because you've got cyclicity, and because the EMAs are lagging indicators, they will take their time to cross. And as you can see here, 1, 2, 3 cycles, they crossed, price came back to the 20 EMA, and this is the point in which I would put the POGO EA onto my 30-minute chart and wait for the setup. Now, that setup might come in the next few minutes, it might be in an hour, it might be 4 hours, it could be longer. And I will show you how you manage that in the next video. But you just don't know, sometimes it could take a very long time, as we saw from the previous example. Now let's take a look at the 30-minute on that one. Here, you'll see the 3 cycles. And this is where we would have loaded the EA right on this bar. And as you'll see, the 20 and the 50 were in order. So all we're waiting for, well, all the EA is waiting for now, is for price to interact with the 20 EMA as it did here. So this is around about the time the trade would have taken. As you can see, we'll just take a look here. We're taken around here with a 30 pip stop loss, 1-to-1 you'd have got here, and then your second trade you leave to run to 2-to-1. Again, you can make that 3-to-1, 4-to-1, whatever it is you like. Again, once you bank your 1-to-1, you can you can set it so that it will go to break even, so you have no risk on the table, or you can leave your stop loss. Again, I will cover that in the next video. Now let's have a look at a short example. So here we have USD yen. When was this now? This was in November. And you can see I've got 2 cycles. You've got a crossover here. What I do is I wait for a crossover. I would like to see a crossover. I also like to see the price coming back to the 20 EMA or even beyond it to the 50 EMA and start counting the cycles from then. It's not essential, but I just find that as for me, it's just I've got a slightly higher, I find I have a slightly higher probability of success, but it's not always. So you could even go from back here and start trading from here, because there you've got 1 cycle, 2 cycles. You could actually start trading from here. But for myself, I would start here. But it depends on what works for you. There is an element of personalization that's allowed within this strategy. So there's 1 cycle and 2 cycles, and then you've got some good price action here, which shows a reversal that is imminent. So I would have put POGO on this bar on the 4 hour, put it on. That would have been at midnight. I could even have put it on here at 8 o'clock at night or at midnight, and then just wait for the conditions to be right. I can then trust the POGO will wait for conditions to be right on the 30-minute chart to take the trade. So let's have a look at what it would have been like on the 30-minute chart. Well, that's where we placed the EA. That's the time and that we would have placed the EA on the 4 hour chart. Remember, that was midnight. And you had the 20 above the 50, and obviously we're going short. The 20 is below the 50 on the 4 hour. You see there, 20 is below the 50 on the 4 hour. But here we have to wait until the 20 goes below the 50 in order to take a short, because POGO will only take the trade in the direction of the EAs on the 4 hour. So if the 20 is above the 50, it will go long. If the 20 is below the 50, it will go short. But it has to wait until the EMAs are in the same direction on the 30-minute. So here we loaded POGO, and we had to wait till the price crossed, and then price interacts with the 20 EMA. In this case, the price interacted very soon after the crossover happened. So the trade would have happened here, and that is a perfect setup for the trade. And here we would have gone in around about here. Again, there would be some slippage, so we'd have gone around here, 30 pips stop loss up to about there, and then the 1-to-1 would have been around here, and then your 2-to-1 would be down there. If you can see, there's a bar down there, would have been about 2-to-1. Let's have a look here. Yeah, so round about here. So there you would have easily banked your 3-to-1 in for the strategy on that one. Now the time that this would have taken was the 21st at 1:30 in the afternoon. So 21st of November at 1:30 in the afternoon, you placed the EA on the chart on the 21st at midnight, or even earlier, 8 o'clock in the evening, if you remember from our example on the 4 hour, where we said you could actually place it here, which is 8 o'clock. In fact, you could place it there. My only hesitation about placing it there is that that is a continuation bar. It may not, it may just keep going. But even if you did put it on this bar, it's not a big deal, because the EMAs would obviously have continued in the upward trajectory. If you'd have placed it sort of back down here, those EMAs would have continued in that upward trajectory and not have crossed down. So by then, either POGO will have expired because there's an expiry on it, and that time of expiry you can set, or you'd have removed it. So with that, if I'd have placed it on this bar, and there had been another buyer bar here, I would definitely have removed it. But the fact that the sellers came in here, and then the buyers tried to get back in here, but the sellers won the day where it closed on the low, I definitely would put it on this bar, most definitely. Strong indication of a change in direction. So I hope that has helped you. If you've got any questions, please do contact me or refer to the FAQ guide. But it's a fun strategy. It's an easy strategy, and what I love about it is you do so few indicators, most of which are lagging, and it uses strong price action, and that's what I like about this strategy.